Good afternoon, dear guests. Good afternoon, panelists. Pleased to see you here. Thank you for joining the discussion. And of course, Yinfan, thank you very much for your very insightful presentation. Yeah, we're going to speak about bankability, continue our discussion here. And the first question I would like to ask you, the trends show some slowdown on the market, as I understand correctly. So how do you see, are these short-term trends, or it's a long-term, which will remain with us? And the most important, what should we do to recover the markets? So what would be the expected actions from the stakeholders, the policymakers, the developers?
I think there's certainly a slowdown in the short term, and we've heard presentations from other speakers earlier. So I think investors' concerns are very obvious from today's conference. And the short-term impact will, I think, last for the next, in my opinion, 2 to 3 years. We'll see current projects being built, but then I think further FIDs will be heavily contingent on people's views around future markets. I think there might be some investment and people taking more bullish views on the markets, but overall, I will strike a note of cautiousness. I still think, as my keynote suggests, there's some optimism in the market. I think the policy direction generally is good. I think, but translating those policies into concrete, bankable regulations and subsidy schemes or whatnot for the stakeholders in the industry is key here. And right now, we don't have a lot of general visibility around those. Not just in the Baltics, I think this also applies to other parts of the European region as well.
Great, thank you. Gatis, question to you. How do you see the market from the lender's perspective? What is the trends in the applications for the financing? Are they still active? What is the pipeline for the next some period of time you can see forward? And maybe how these changes in maybe this market trends affect the financing conditions?
Well, thanks for the question. It's actually great to be here, and thanks for the invitation. First of all, we as a Swedbank actually are one of the banks who are financing renewables in the Baltics. We are approaching, I guess, close to 1 billion portfolio in renewables. In wind, I think across the Baltics, we have close to half of that. Having said that, of course, we have some observations, and maybe zooming slightly out, not concentrating only on the wind, than on renewables as such, then the last couple of years, of course, have been quite rapid in development. And I guess the first wave of solar sort of has passed. I believe there is less inflow from solar projects, especially standalone solars currently, as they face certain revenue challenges with the outlooks and prices currently there. Hybridization is something that's still considered in that field. And for wind, I would say it's a bit different story across the Baltics as well. So wind is something has been rolling much more persistently in the Estonian and Lithuanian market, and in Latvia it has picked up the development stage much later than in other markets. So wind projects are only, I would say, coming, or inflow is rather evident now. Wind projects are on the table in our current operations, how to say, and they are becoming ready from the technical, ready-to-build perspective. And then the big question currently, of course, is this bankability for them, for us to take decisions on financing them, and I believe also in the end for the developers to take final investment decisions on these projects, as the overall outlooks, which have been for the price curves, for the other aspects of the financial performance of such projects, have been also experiencing some rapid development over the last years, starting with 2022 and Ukrainian crisis and energy crisis with very, very lucrative returns, and currently reaching levels which are maybe at a lower, I would say, and challenging levels for desired leverage levels or desired capitals for such projects to be implemented. So all in all, we are, of course, also a local commercial bank, and such projects is something that we are somewhat also on a learning curve with them, seeing the development of the outlooks and the pricing, some uncertainties there, the negative price hours, the increasing negative price hours, the balancing costs. So we are fine-tuning our approaches, so maybe they are becoming at some points more conservative, but all in the end, everything boils down to cash flow predictability and certainty, and the fundamentals are, I would say, the same there. So we see project inflow, we see these challenges there. We are still looking and working with the developers, looking towards financing them. Yeah.
Great.
Maybe.
So basically, the conclusion from you is the market is still active,
Yeah.
the interest is there, and the financing is going forward with some adjustment on market volatility and some challenges.
Basically, yes, the market is active, but these decisions have to be taken, and of course, this risk sharing maybe is one side of the coin that has to be kind of properly shared across the developers, the sponsors, and the bank, as in the end, kind of the financing provided can be as much as the cash flow supports. So the more predictable, the more stable cash flow, the higher financing can be considered. And here, of course, it's the sponsor's capability, capacity, etc. is of importance, but also internal projects' ability to generate cash flow. So if it's pure merchant, definitely it's more squeezed than if there are any PPAs or CFDs available for.
Yeah, thank you. Yes, we will pick up on these tools a little bit later. Then question to you, Benjamin. So we see the projects are developing. A few years back, we also saw this rapid growth in new projects, and that time the center of discussion was some insufficient supply in wind turbines, for example. How do you see the market now? So have you picked up on the development and supply pipeline? Is it full? How is it going forward? What is your forecast for the upcoming years?
Yeah, first of all, thanks for the invitation, and hello, and the audience. Yes, we have picked up, and I would like to refer to a very tragic timing, meaning the Russian entering the Ukraine in 2022, because at that time, lots of discussions were placed in the European Union to say, okay, what do we do for the future? We need to go, on the one hand, more into the renewables because we want to get more secured in energy. That was point one. And of course, we want to keep energy pricing competitive. That was the general guidance that we got. And out of that, we realized there was the Green Deal, there was the RED III requirements coming from the European Union, so good ideas. In addition to that, the Net Zero Industry Act, trying to diversify and getting resilience within our supply chains. And I think I can speak for the OEMs. We took the last 3 to 4 years to build up the supply chain properly to be prepared for the growth that everybody would expect from the European OEMs. So I can say, yes, we have the capacities. We have them in Europe, we have them in Asia, so a diversification that we are not depending on one single source of some supply chain. So this is all there. Are we fully booked yet? Can we do more? Yes, we can. And of course, the European Union, and taking it as an example, luckily it's always going up and down. And there are countries that are now having, let's say, a small dip. On the other hand, and the ambassador of Germany just mentioned it, we have a very strong demand in the German market in regards of permits and installations. So this is really giving a good base load. And we also see now the projects coming into construction in the Baltics as well, where we see also the catch-up. So yes, we are ready and looking for the projects.
Great, good to hear that. Thank you. Renārs, question to you as a developer. What's the mood on developer side? How you see the market? Are you ready with advancing the projects? And maybe what are the struggles you see in terms of bankability as well?
Yeah, well, good afternoon, everyone. From developers' perspective, from energy companies' perspective, well, the struggle is still there. So, well, all of these years, essentially, the Baltic market has been an island also from, let's say, not only from the market perspective, but also from financing perspective in a way that, well, we do not have CFDs, well, not at least in an amount which we can see in other European economies. Well, due to the small size of the market, essentially no PPAs. The ones which are there are some kind of hybrid products, somehow linking what's going on here in Latvia or within the Baltics to some other markets on the basis of, well, similar price trajectories for energy and so forth. So it has been sort of a sandbox where developers, energy companies would have to create some kind of, well, way how to push their, well, projects they have developed into construction phase and into operation. And on that front, well, the struggle is still there. We have not passed really these barriers. On top of that, well, another item, of course, is to consider, well, from the finance perspective, the play is quite easy. So there is a project. It has certain IRR based on expectations and assumptions in the project, which can be verified externally. Well, everybody can see that. There is certain weighted average cost of capital, which depends heavily, of course, on not your own cost, not only on your own cost of equity, but also on debt sizing and debt cost. So eventually, once you are able to trigger, well, get the weighted average cost of capital below the project IRR, well, sort of you should push forward. But, well, in this case, well, it's also a matter of, let's say, the overall structure, how you proceed. So two types of financing. Ideally, that could be a project financing. No recourse project financing. Well, you are evaluating project alone on its merits and not, well, taking into consideration. Another option, and this has been predominantly what has happened in Baltics, you do it on well, essentially as a balance sheet financing. So you have a company, most probably state-owned, which, well, is able to take on well, those risks associated with that particular project and accommodate on its own balance sheet and making this sort of easier exercise for lenders to step in on balance sheet basis. Then again, what we are facing here is, well, given the maturity of the market and saturation phase, we will be looking more and more at this sort of pure project-based financing because essentially, well, financing options on balance sheets, well, they have already been filled up. No options there. So essentially, it's all about projects and how project finance could work out in a dialogue between developers and equity investors on one side and lenders on another.
Thank you. You have touched actually one important topic is the market saturation. We have heard already a little bit in the first session about that. And Yinfan, maybe you could comment on that. What are basically the signals of market saturation? How can we understand if it's there yet or not, and how you would see the Baltics, considering that it's perceived as a one market? Lithuania goes forward very rapidly with its development. We have heard they're planning to reach basically their own consumption by 2028. How you see the market saturation?
I think you can look at market saturation through several lenses. So from a pure merchant perspective, you can obviously look at price. So clearly, the neighbors in the Nordic countries, we see saturation because you see clear decrease in capture price, you see clear increase in capture discount, and as a result, you don't see project being able to finance on a merchant basis, and also the utility PPAs, which are priced off the back of merchant prices, are not bankable either. You can also look at it from a PPA offtake perspective. So the lack of PPA offtake will point to market saturation as well. I think we have seen a handful of PPAs being signed in the Baltics in the past, whether with state-owned utilities or with large chemical fertilizer companies. But those sizable industrial customers' demand have been met by the PPAs. And you're left with maybe small to medium-sized enterprises with different credit ratings, and they're not ready to sign the PPAs that those large industrial companies could sign. I think in the future, if we have more interconnection between the Baltics and continental Europe, and I mean, Renārs touched on the point of cross-border PPA, I think it could be a viable route, but it has to be linked with the physical reality. We sometimes assess cross-border PPAs where the interlink between the host country, where the generator is located, and the consumption country is not that strong. So especially with the fast evolution of capacity mix in those countries, current links could be broken. And one has to take a very close look at the fundamental linkage, or otherwise you have to be able to hedge the cross-border basis risk by buying physical or financial transmission rights between the two countries. So I think cross-border PPA could work, and it could slow down the saturation or open new opportunities for asset owners and developers, but it has to be scrutinized. I think another way of unlocking opportunities and delay or push forward the saturation point is to have hybridization and actually creating products that customers really want. So historically, what we see is there's been a number of standard products being pushed out into the market, whether it's a pay-as-produced PPA or a base load PPA or a PPA with a collar structure and some variation of that. But actually, nowadays, I think there's increasing focus on customer, what we call a customer-centric strategy, where you actually create a PPA that meets the customer demand. And once you do that, I think you will unlock further demand and push out the saturation point.
Okay, thank you. But you mentioned the PPA could kind of improve the situation. You mean the PPAs with like third countries outside the Baltics, correct? Like that kind of transborder to increase this consumption. Thank you. Gatis, how do you see the market saturation risk? Do you consider it as a risk when you foresee it maybe to step in, and what would be your strategy?
I think saturation is definitely there. We have seen it in the solar field already to some extent. Here we actually evidence that there's maybe no individual Baltic country, but as already before in the previous panels mentioned, it's the whole Baltics together. Of course, everything depends on the interconnection stability and then some maintenance works, etc. But in general, we have a high convergence of price. And I would say this is one of the risks that in general the Baltic market as a whole is rather small still comparing to the other markets. And such rapid development as we saw in sun actually can saturate and fill in the market very quickly, and then the outlooks are, adjusting also rather quickly, and this has been the case in the last years, and I think it's definitely evident risk for all other renewable and energy-related projects, including hybridization, storage, and wind as such. So this is definitely this uncertainty which is there. How fast can it saturate? What are the implications? And what the base and maybe stress scenarios the projects can withhold in case negative hours increase, capture price drops below 40, 30, 20, and then what? So yeah, definitely we see it as a risk. And what are the solutions, you may ask? Colleague already mentioned the tools which can stabilize the cash flow or the revenues, which are some direct or indirect PPAs, potentially CFDs. Another, of course, hope, or then it's like already a longer term game, is the consumption picking up. So definitely there needs to be a support or any other tools how to actually increase the consumption locally and have connections with markets which are more inert, like bigger ones than the Baltic ones, which would provide this some stability of the price. Yes, we also in other markets see the prices, not too high during the wind blowing or sun shining, but definitely it provides much bigger scope.
Yeah, so basically the price volatility is one of the main risks that the market saturation brings. And Renārs, maybe from developers' perspective, do you see markets already saturated or to be saturated in some time? And what are the tools you would, as a developer, be using to approach the financing to get good bankability conditions? Maybe some support schemes, CFDs, PPAs. What would be your approach there?
Well, definitely, the market itself has become more complex as it has been a few years ago. So all the items in relation to what battery storage offers us, all the opportunities lying in ancillary services and the way how market operates, it creates additional potential which could be of interest as well, essentially part of the offer to lenders. So essentially, looking at the market itself and looking at what's going on, I guess what we have to distinguish is there is quite a gap between what in some cases developers or energy companies see as equity providers, as something what they can actually contribute to the project, and what lenders are able to deliver. So in simple analogies, developer, as a proper father has brought up, his project, his beloved daughter, from low age, from the early stages down to the point where it's ready to build that. Daughter is beautiful, she is well educated, she has some decent paperwork to show, and essentially, the father has to somehow to get his daughter married. So lenders, as potential husbands, would come in and look at what actually is there in the store, and for instance, the first check, what is all about? Can she make a decent supper, decent dinner every day, or bake pancakes or whatever? Well, she can. But then again, there are some additional questions. So instead of P50 level, which is something that equity providers would look at, or P70, banks are more conservative and look at P90. So can you make pancakes with using just one hand instead of two? Well, that's the first check. Well, if you pass, good. Let's go to the next round. So some additional items coming into market, like potential curtailment. Well, can you actually make dinner in case there is no pan available from 8 to 9 o'clock due to curtailment? Can you? Well, you can. Great. You've got batteries where you get some kind of storage in place, or some alternative source for pancakes. Good. You're qualified for the next round. And then, each step, just also potentially consider what happens in case, if you pass all of this, still a dowry in the shape of, some additional parent company guarantees, some guarantees from the parent company, apart from what the project itself, what the daughter is able to deliver, is also a critical component. So the question is how to bridge these gaps and to somehow to make this alignment suitable on both sides. That's the main challenge, I guess, for the years to come.
But if you're speaking about the state support, do you consider it's necessary?
It wouldn't hurt, but then again, let's be realistic. So, it's good to hear that Estonia is moving that direction. And again, the state support is not really state support. CFD is not support, it's rather risk elimination vehicle, a tool which is able to eliminate unnecessary risk. It could be shaped, in some cases, if governments were clever, they could potentially shape CFD for energy producers with an inverse CFD guaranteeing a, electricity price floor for large producers, energy consumers coming and stepping into, investing into a country. So effectively, they would take zero net risk on some, essentially creating some kind of analogy of PPA, but the point here is provide credibility. The question is, are politicians ready to provide credibility on behalf of, the government? And I guess it all depends on which country we are talking here about in Baltics.
Thank you. Gatis, question to you. From your perspective, what would be more reliable and more preferable tool for banks, like the guarantee and the mitigation of volatility risk? Would it be a CFD or PPA, or maybe state-backed PPA, which you're also hearing from time to time?
I think there is no golden key here. I wouldn't prefer any of them. Definitely, each of them has some pros and cons. The CFD most likely is something where the off-taker or the other party for the CFD could be more reliable than a single PPA off-taker. That's one part. I believe also the CFD as such has, as already also Renārs mentioned, there can be, it cannot always be treated as only a subsidy. It's actually a tool where both parties can benefit from such a solution, both the developer or the receiving part, as well as the society, which has some ceiling for the pricing as well. And then is the question how it's transferred to the end users, to the consumers. So that definitely, all these things kind of improve the overall cash flows on both sides. I think the con of CFD is political risk and political sensitivity as such, and I think it's especially evident in Latvia, where we have the historical experience with our OIK, or the subsidy system, which in essence I see as a quite screwed system at that point in time. So that still is in our everyone's heads, and no one wants to talk about even any support towards that direction, even though in essence CFD is not even a full support. At some points yes, but at some points it can give back. So yeah, that's a tricky part. PPA, on the other hand, is like less of this political risk, so you kind of have a direct interaction with someone who is off-taker, either direct or maybe virtual, but then of course, and it's no pressure on the budget for if needed in general, but then of course it's like a single or several party credit risk basically, which typically for off-takers, especially here in the rather shallow Baltic market, direct off-takers which are small, the profiles, the risk profiles are most likely definitely lower than CFD counterparty, which would be the state in
Would
many
then state-backed PPA solve the issue?
I don't know. It depends. I think a state-backed PPA, it's the previous OIK system to some extent. So who is the buyer? So it's the subsidy in more direct. The state-backed PPA, it most likely doesn't have the upside for the state part. Maybe I'm wrong, but then again...
it would probably eliminate some risk.
Yeah, of course, that would be the most safe to have, but I think it's even bigger political backstop there in general, especially to even name such a tool this year in the election year. So I guess it's not viable.
Okay, thank you. Benjamin, question to you as a turbine supplier. You have the opportunity to work in different markets, mature markets as well, the ones which have or have not the state support, which have already developed PPA market. How you see the difference there? How basically you observe the differences in demand, in stability of the market?
Yeah, maybe you can really make the difference in the comparison between maybe Germany on the one hand and the Baltics on the other. And really taking what's coming from the European Union as requirements, and how do we implement and also interpret it within the countries. And taking a good example, in Germany, we took it quite serious to implement the RED III for simplifying permitting processes. Up to 2023, the average megawatts that we permitted per year was just 3 gigawatt, that's it. And then all the rules coming from the European Union were implemented properly. And the last year we have permitted 20 gigawatts, which is a surprise. And now it's really coming also for the next years. So there's a good pipeline to come, which brings a positive environment and also the trust. And we also have the advantage that there is still a feed-in tariff, which is also positive because from the finance perspective, it is the easiest to have in regards of, and you're also smiling, so this is a very comfortable environment. On the other hand, and this is now coming next, we have a good time now with installing several gigawatts per year. On the other hand, now we also consider what's coming next. And there's the Net Zero Industry Act coming, there's the Industry Accelerator Act coming, all from the European Union, there is the discussion on the CFD. And then there are countries like Germany, but not only, that are really making their mind already how to implement it, how do we interpret, and it's getting very complex. And we see that the uncertainty is again growing, although there is a good market momentum in slowing down financing and project security just because of the changes in the regulations to come. If we see on the other hand the Baltics, and I see that the permitting takes longer than in Germany, although it is very simple in changing turbines, we see that there's bigger progress on grid extensions, and of course all countries in the European Union are complaining about grids, but here it is still much better than in Germany, for instance. What I also appreciate to see here is, and I had the discussion this morning about Net Zero Industry Act, about CFDs, and I see a very clever approach also from the associations, from all the players in the market, and also from the government saying, hey, we check carefully whether we will implement it or not. So it's not just saying we will do it, we will check first how it makes sense before we will go into the discussion. And I think this takes away some of the uncertainty that we see in other European Union countries.
Yeah, thank you for this. You brought also one important aspect, which was mentioned also on the introductory speech by the Madam Ambassador, that the regulatory framework and stability of it is very important for the development, because of course project takes years to develop, and it's good that the game rules do not change. Yinfan, in this context, the question to you, in our age of energy transition, how you see this risk of regulatory changes? Is it a real risk? Should it be perceived as a risk, or is it just a new normal we need to live up to?
It's a tough one because, in a sense, it's unhedgeable. So I think even the best utilities with a large team of policy and regulatory experts, they can try to influence, they can try to lobby, but they don't necessarily set the political agenda. And sometimes the policies have a top-down steer, and they might be done for certain political reasons. And I think there's always going to be a certain reactive nature to how we can deal with policy and regulatory risk. But I think certain players can be better prepared against those risks than others. And in terms of actually responding and changing, some players are better at doing that. So, for example, well, this is not strictly a policy change, but a regulation change in the Nordic and Baltic balancing market. So when the markets changed from 1 hour to 15 minutes, certain players were still using 1 hour forecast to forecast their wind production, bidding that into the day-ahead market, which results in elevated forecast errors. And then when the balancing price becomes more volatile, they see a higher cost. They are passive asset owners, and therefore they take the cost of being passive. Whereas more active asset owners, they respond to the change in a more proactive way. They engage with the OEMs early. They try to change their system so that they can actually forecast on a 15-minute basis. They renegotiate their BRP contracts to deal with this regulatory change, and they're better off. So I think policy and regulatory risk is always going to be there. And what hopefully the past couple of years have taught us is you have to have certain capabilities, whether in-house or whether acquired through third parties, through partnerships, to deal with those risks.
Okay, yes, thank you. Thank you for the opinion. One of the major changes in regulation last year experience was the introduction of the flexible connections. So, Gatis, question to you. How do flexible connections could affect the project economics in terms of financing and impact their bankability? How you see it?
Definitely they would expect. Short answer. A bit longer answer is, of course, that the developers have a bit more of a homework to be done to try to see what are the effects for them from such flexibility limitations that they might have down the road. So still it all again boils down to modeling and then financial planning for the base case, for medium case, and maybe for a severe case where the full potential of the down regulation is used. What does it mean for the project? What does it mean for the cash flows? And is there resilience towards overall project life, survivability, basically? So it's important, of course.
Yeah, thank you. And from the developer's perspective, Renārs, how you see it, how would it impact the adoption of financial investment decisions?
Well, this per se, being part of the industry and really being aware of where and when such, curtailments would apply is something that, gives, of course, us, some kind of internal edge simply on the basis of expectations. So if you can see exactly, in this case, in case of Latvia, we should really be grateful to our TSO, who are very transparent about available capacities, what kind of permits have been issued, and so on. This helps this planning process. And in this case, well, it's all about, well, first understanding yourself, what kind of risks are you potentially facing on a particular, well, grid connection line, and so forth. And, well, to some extent also being able to demonstrate this to external third parties. But eventually, of course, the final decision in order to get your daughter married lies on the potential husband on the lender side. So eventually, lenders should trust that it should be fine and workable.
Yes, thank you, Renārs. So we're approaching the end of our discussion, so maybe a short question to you as well, Yinfan, regarding this flexible connection. Latvia is not unique who chose this solution. How you see how mature markets are mitigating these risks which arise from flexible connections?
So it's a common theme. A lot of markets are rolling out these flexible grid connection agreements. On the one hand, they help developers secure grid, so you at least have access. On the other hand, it does create some uncertainty, especially the way curtailment decisions are being made. In some markets, they're being communicated maybe 2 days ahead of the actual day-ahead dispatch. In some cases, it's actually happening at the day-ahead stage. So in certain markets, you can somehow mitigate the risk because you can plan ahead, maybe with not a long horizon, but at least you have some advanced warnings. In other markets, you have to purely react to it. And this is where I think Renārs touched on a good point. The transparency from TSOs is really important because otherwise you don't have any information to act on. I think it's a good idea, but the implementation should be more harmonized across Europe and make it easier for people to understand what's the underlying rationale for curtailment. And this is not just about flexible grid connection as well, with the implementation of flow-based market coupling across Europe. So a lot of the times, the real-time grid constraints are being factored into the day-ahead price formation these days. But those are not the things that even the more seasoned industry analysts are familiar with, unless you're really into the technical details. And I think that's the level of competency that's now required for energy industry stakeholders to gain in order to navigate this landscape.
Yeah, great. Thank you very much for your opinion. Maybe we have a question from an audience. I see we do not have on this application any questions submitted, so maybe someone?
Yes, we do have 2 microphones in the audience. Please do raise your hands and we can turn to you. Looking at you, great audience. Do we have any questions? Well, usually if there aren't any questions, either everyone's Latvian or everything's answered. So we'll see, because Latvians don't usually ask questions when we ask them. All right, last chance, 3, 2, 1. Natālija, looks like all the questions have been answered.
Great, thank you. So approaching the end of our discussion, maybe a takeaway from each of you, how to make the project bankable in this changing environment, in these volatile market conditions, and how to navigate today's market. Yeah, maybe. Yinfan, you can start.
I think the ability to manage long-term revenue certainty, so things we talked about include PPAs and CFDs will be welcome instruments, but also the ability to manage short-term risks and also unhedgeable risks. So having a broader capability and competency within one organization or acquired through partnership, I think is important because at the end of the day, in project finance, you're not only looking at the revenue line, you're also looking at the cost line. And if balancing cost suddenly goes up to 15 euros per megawatt hour, great if you have a good PPA, but it's going to eat into 20-30% of your revenue straight away.
Thank you. Benjamin?
I think it is about good cooperation, early cooperation and communication between the partners. It's not about customer and supplier relation only. It's about making your mind about a good project from the development up to end of operation. It's about operational time. It's about the right loads at the right timing. So communicate early, involve your stakeholders to create the best project that is possible.
Good advice. Thank you. Gatis?
I think from our side is as Renārs was mentioning, to prepare the child fit for all the purposes or fit for different situations. So also earlier in the day, there was a suggestion, don't look on the worst case as your base case. That's true, don't look at it as a worst case, but still consider what are the cases or what can happen, what could be the stress cases, and what are the resilience plans in place for each and every project, how it could be tackled if something alike happens. And that's the plan or the way how to think about the risking project as such.
Thank you. And Renārs,
Well, then just to, addressing my colleagues here on the panel, so advice perhaps to market research companies, and Baringa is doing outstanding job. So, well, just be aware that the, let's say, lowest scenario curve actually is a base curve for decision makers. So it's always like that. So please take this into consideration, and within the limit of your integrity, try to, well, to stick it a bit higher, because it will be baseline anyway. For technology providers, well, you know, for energy companies, it's a last-minute decision sometimes to get all that things tied up. When everything seems to be almost clear, it's still, well, something out there, and therefore, please be patient with perhaps some last-minute amendments. And then again, for the lenders, yeah, it's a marriage which should supposed to last at least for 10, 15 years until the project has repaid itself. And in this case, well, let's sit down together and look into everything that can be sort of eliminate all the risks we can at the very beginning.
Great. Thank you very much, dear panelists, dear audience.